That's Nucor. This is a steel company, steel and steel products. These guys have been, are these guys the ones that were in the news that a Japanese company wanted to buy them, but it's being blocked by the administration? Let's take a look. Yeah, probably. So they were really going up, and then they've really been dropping off. Okay, so Nucor, 27 billion in market cap, 31 billion in revenue. This is a commodity-based business, steel and other products. PE is 11, forward PE is 18. It's not an overly exciting business. It's very old, and we'll take a look at their margins in a bit. They pay a dividend. It's decent. I'm not a big dividend investor. I'd rather get a nice return of appreciation in a stock versus a dividend. That's what I'm after. Analysts think it's really discounted by 49%. We'll take a look. All right, so sales have been going down. So that is not good. And the sales have been going down for some time, quarterly, if you look at the quarters. And I think it's that commodity prices have really settled down. And, commodities are going to drive Nucor's profitability. If they can sell steel at a higher price, they just make more money. Those tariffs may be a good thing for Nucor because if you raise the cost of steel or the price of steel, Nucor is really going to benefit. The gross margins are 15. That's the reason why I do not invest in steel companies and commodity-based businesses. Is the margins are not very good. We get to invest in any stock in the stock market, thousands of choices. And I'd rather choose, stocks that have really good margins and just try to find them when they're discounted, or maybe find them when they're little companies that are growing, and stay away. And my decision is to stay away from companies like this that, things can really go bad for a company like this. If things go wrong, they don't have a lot of margin to fall back on. Their margin is really low. Free cash flow's there, but you can see that free cash flows was really high in 2022. I think steel prices were higher. 2023 is also good, but now it's really come down. So could I get to their valuation? Probably. I don't think it'd be tough to get there because this is a very old business. It has some cash flow. The gross margins do not look good to me. I'm willing to bet these guys are also carrying some debt. It's just an old business that they have to borrow money. So not too bad. They have cash of 4.86 billion and debt of about 7 billion. So they have about $2 billion of debt. That isn't too bad because their EBITDA is almost 5 billion. So they can pay off debt very quickly. They have a strong balance sheet, but they're just in a business it's in an industry that I just don't like. Margins are too low. Maybe you make a little bit of money for a year. You could see that, boy, things can go really rotten, huh? The 1 year looks terrible. And the 5 year, hey, this stock's really getting it done. Go Nucor. And somebody who really wants to be passionate about steel companies, this isn't a bad stock to look at. I think we can definitely get to this valuation. I don't think it's all that far out of sight, and it would be a good investment. I'm picking the sectors that I'm going to invest in. And for me, my strengths are in like software and those types of businesses. I'd rather be a specialist in a couple of sectors and invest there rather than trying to spread the field. I have dabbled in steel, and it wasn't a disaster, but it just really was not a good idea for me. I made a little bit of money, but I just didn't feel like I was really able to pick the best companies and know when to buy and sell. So I'd rather just stay out of this space and let others invest in steel. Analysts, how many analysts cover this company? 8 of them. 8 analysts cover the company. They all think it has a price target that's higher. That big price drop in the stock for the past couple months is really creating potentially an opportunity for somebody that wants to buy into this company. The revenue is supposed to go up a little bit. And again, if those tariffs come in and raise commodity prices, Nucor is going to benefit because higher prices mean Nucor gets to charge more. They're going to be more profitable and generate more cash. So one thing to think about when you're looking at Nucor. Earnings per share is going to expand nicely. So things look really good for Nucor. So good looking company. Everything that's really working is in technology and communication services and financial services. This is kind of an old school company that's part of our economy that's been getting it done for 100 years. So hopefully they continue to do well, employ a lot of people, give them good jobs to make money for their families.